Hello everyone, and welcome back to Satoshi Finance. Today we will delve into the transformative potential of renewable energy and its crucial role in addressing global energy challenges. Renewable energy sources such as solar, wind, hydroelectric, and geothermal power harness naturally replenishing resources, offering a sustainable alternative to fossil fuels. By tapping into these clean and abundant sources of energy, we not only reduce greenhouse gas emissions, but also mitigate the environmental impacts associated with conventional energy production methods, such as air and water pollution. Moreover, the shift towards renewable energy aligns with broader efforts to combat climate change and achieve international sustainability goals, making it a cornerstone of the transition towards a more resilient and eco-friendly energy landscape. Furthermore, we highlight the burgeoning interest in renewable energy investments, both from individual and institutional investors alike. This surge in interest reflects growing recognition of the financial potential and societal benefits associated with renewable energy ventures. As governments worldwide implement policies to incentivize renewable energy deployment and combat climate change, investors are increasingly drawn to the sector's promising growth prospects. Additionally, advancements in renewable energy technologies, coupled with declining costs, have bolstered investor confidence in the long-term viability of renewable energy investments. Overall, the convergence of environmental imperatives and economic opportunities underscores the significance of exploring the dynamics of investing in renewable energy. In this segment, we provide a comprehensive overview of renewable energy stocks and funds, elucidating their fundamental characteristics and investment potential. Renewable energy stocks represent shares in companies that are engaged in the production, development, or distribution of renewable energy technologies and solutions. These companies span various sectors, including solar, wind, hydroelectric, biomass, and geothermal energy, offering investors diverse opportunities to align their portfolios with their sustainability objectives. Additionally, renewable energy funds are investment vehicles that pool capital from multiple investors to invest in a portfolio of renewable energy-related assets, such as stocks, bonds, and other securities. These funds provide investors with access to a diversified range of renewable energy assets, thereby mitigating individual company risk and enhancing portfolio resilience. To further illustrate the landscape of renewable energy investments, we highlight examples of popular renewable energy companies and funds that have garnered attention in the market. Companies like Tesla, NextEra Energy, and Vestas Wind Systems have emerged as leaders in the renewable energy space, with robust business models and innovative technologies driving their growth trajectories. Similarly, renewable energy funds, such as the iShares Global Clean Energy ETF, ICLN, and the First Trust Nasdaq Clean Edge Green Energy Index Fund, QCLN, offer investors exposure to a broad spectrum of renewable energy assets, spanning across geographies and technologies. By examining these prominent players in the renewable energy sector, investors can gain valuable insights into the diverse investment opportunities available and make informed decisions to capitalize on the growing momentum in renewable energy markets. Renewable energy investments present a myriad of opportunities driven by several key factors. Firstly, the global demand for clean energy continues to soar as societies increasingly prioritize sustainability and environmental stewardship. This demand is fueled by concerns over climate change, air pollution, and the finite nature of fossil fuel resources. As a result, renewable energy sources have become indispensable components of energy portfolios worldwide, offering investors the prospect of tapping into a rapidly expanding market with substantial growth potential. Moreover, government incentives and policies play a pivotal role in shaping the renewable energy landscape, offering a supportive framework for investment. Many governments have implemented renewable energy targets, carbon pricing mechanisms, and subsidies to incentivize the adoption of clean energy technologies. These policy measures not only stimulate investment in renewable energy projects, but also create a stable regulatory environment conducive to long-term growth. Additionally, technological advancements continue to drive significant improvements in the efficiency and cost-effectiveness of renewable energy technologies. Breakthroughs in solar photovoltaics, wind turbines, energy storage systems, and grid integration technologies have led to substantial reductions in the levelized cost of electricity from renewable sources, enhancing their competitiveness relative to traditional fossil fuels. As renewable energy technologies become increasingly efficient and cost-competitive, investors stand to benefit from higher returns and reduced risk exposure in their portfolios. If you've made it this far, consider taking a moment to subscribe to our channel. Subscribing is absolutely free, and you can always change your mind. We have a wealth of financial insights and exciting discussions lined up for you. Your support not only helps us reach a broader audience, but also motivates us to continue creating high-quality content that educates and empowers viewers like you. So, hit that subscribe button, stay tuned, and join us on this journey towards financial empowerment. Thank you for being a part of our community. Renewable energy investments, while promising, are not without their challenges. One significant hurdle is the inherent volatility in the renewable energy sector. Fluctuations in commodity prices, changes in weather patterns affecting energy production, and market dynamics can lead to considerable volatility in stock prices and fund performance. Investors must navigate this volatility with caution, employing risk management strategies to mitigate potential losses and capitalize on opportunities presented by market fluctuations. Furthermore, regulatory uncertainties and policy changes pose a persistent challenge for renewable energy investors. Government policies and regulations can significantly impact the economic viability of renewable energy projects, influencing factors such as subsidies, tax incentives, and permitting processes. Changes in government leadership or shifts in political priorities may introduce uncertainty into the investment landscape, potentially affecting investor sentiment and project economics. As such, investors must stay abreast of regulatory developments and adapt their investment strategies accordingly to navigate this complex and evolving regulatory environment. Additionally, renewable energy investments face stiff competition from traditional energy sources, such as coal, oil, and natural gas. Despite the growing momentum towards renewable energy, fossil fuels continue to dominate the global energy mix, posing a competitive challenge for renewable energy technologies. Factors such as entrenched infrastructure, existing subsidies, and political influence can impede the growth of renewable energy markets and limit the investment opportunities available. Moreover, each renewable energy technology carries its own set of risks and challenges. For instance, solar energy investments may be susceptible to fluctuations in sunlight availability and technological obsolescence, while wind energy investments may face challenges related to intermittency and grid integration. Understanding and mitigating these technology-specific risks is essential for investors seeking to build resilient renewable energy portfolios. When venturing into renewable energy investments, several key factors demand careful consideration to make informed and strategic decisions. Firstly, understanding the diverse array of renewable energy technologies is paramount. Each technology, whether it's solar, wind, hydroelectric, biomass, or geothermal, comes with its unique characteristics, challenges, and market dynamics. Investors should assess the strengths and weaknesses of each technology, its scalability, reliability, and potential for growth in different geographic regions. Moreover, evaluating the fundamentals and financial health of renewable energy companies is crucial. Investors should conduct thorough due diligence on companies' revenue streams, cost structures, profitability, and growth prospects. Assessing factors such as balance sheet strength, cash flow generation, and debt levels can provide insights into a company's resilience and ability to weather market uncertainties. Additionally, analyzing management teams' track records and strategic initiatives can offer valuable insights into companies' long-term prospects and execution capabilities. By focusing on companies with robust fundamentals and sustainable business models, investors can position themselves for long-term success in the renewable energy sector. Examining case studies and examples can offer valuable insights into the real-world dynamics of renewable energy investments. Highlighting successful investments in renewable energy provides concrete evidence of the sector's potential for delivering attractive returns. For instance, investments in companies like Tesla or NextEra Energy, which have demonstrated strong growth trajectories and innovative approaches to renewable energy deployment, showcase the opportunities available to savvy investors. These success stories underscore the importance of thorough research, strategic decision-making, and a long-term investment horizon in navigating the renewable energy landscape. Conversely, discussing examples of challenges faced by investors in the past sheds light on the potential risks and pitfalls inherent in renewable energy investments. Instances of regulatory changes, technological setbacks, or market downturns can serve as cautionary tales, illustrating the importance of risk management and diversification in mitigating investment risks. By examining past challenges and learning from both successes and failures, investors can develop a more nuanced understanding of the renewable energy sector and make more informed investment decisions. Ultimately, incorporating lessons learned from case studies and examples can help investors navigate the complexities of the renewable energy market and position themselves for success in this rapidly evolving industry. When considering strategies for investing in renewable energy, investors often weigh the merits of long-term versus short-term investment approaches. A long-term investment strategy entails holding on to renewable energy assets for an extended period, capitalizing on the sector's growth potential, and compounding returns over time. This approach aligns with the inherent characteristics of renewable energy projects, which often require substantial upfront capital investment, but yield returns over the project's lifespan. Conversely, short-term investment strategies involve more frequent buying and selling of assets, capitalizing on short-term market fluctuations or trading opportunities. While short-term trading can offer the potential for quick gains, it also carries higher transaction costs and increased risk of market timing errors. Ultimately, the choice between long-term and short-term strategies depends on investors' risk tolerance, investment objectives, and time horizon. Dollar-cost averaging is another popular strategy for investing in renewable energy, particularly for investors looking to mitigate the impact of market volatility and reduce the risk of timing the market. With dollar-cost averaging, investors consistently invest a fixed amount of capital at regular intervals, regardless of market conditions. This approach helps smooth out the impact of market fluctuations over time, allowing investors to accumulate renewable energy assets at an average cost. By systematically investing over time, investors can benefit from the potential for lower average purchase prices and reduced exposure to short-term market volatility. Additionally, dollar-cost averaging instills discipline in investors' investment approach, helping them avoid emotional decision-making driven by market sentiment or short-term fluctuations. Rebalancing portfolio allocation is a fundamental strategy for optimizing risk-adjusted returns in renewable energy investments. As market conditions evolve and asset prices fluctuate, the relative weightings of different assets within a portfolio may shift, deviating from investors' target allocation. Rebalancing involves periodically adjusting portfolio allocations to realign with investors' desired asset mix, ensuring that risk exposure remains within acceptable parameters. This may involve selling overweighted assets that have appreciated in value and reallocating funds to underweighted assets or sectors with greater growth potential. By rebalancing portfolio allocation, investors can maintain diversification, manage risk, and capture opportunities in the renewable energy sector while staying aligned with their long-term investment objectives. Effective risk management is paramount in renewable energy investments to safeguard capital, optimize returns, and navigate the inherent uncertainties of the sector. Given the dynamic nature of renewable energy markets, characterized by regulatory changes, technological advancements, and market volatility, investors must employ robust risk management practices to mitigate potential downside risks. By understanding and quantifying the various risks associated with renewable energy investments, such as regulatory, technological, financial, and market risks, investors can implement strategies to hedge against adverse outcomes and preserve capital. Hedging strategies play a critical role in mitigating risk in renewable energy investments. Hedging involves using financial instruments, such as options, futures contracts, or derivatives, to offset the impact of adverse price movements or mitigate exposure to specific risks. For example, investors may utilize futures contracts to hedge against fluctuations in commodity prices, such as the price of electricity or renewable energy credits. Similarly, options contracts can provide downside protection or limit losses in the event of adverse market movements. By strategically employing hedging strategies, investors can reduce the volatility of their portfolios, enhance risk-adjusted returns, and protect against unforeseen events that may impact the value of their renewable energy investments. Furthermore, setting realistic expectations for returns is essential in managing investor expectations and avoiding undue risk-taking. While renewable energy investments offer the potential for attractive returns, they also entail inherent risks and uncertainties that may impact investment outcomes. By conducting thorough due diligence, assessing risk-reward profiles, and incorporating a margin of safety into their investment decisions, investors can establish realistic return expectations that reflect the inherent risks and uncertainties of the renewable energy sector. Additionally, maintaining a long-term investment horizon and diversifying across different renewable energy technologies and asset classes can help investors achieve their financial goals while managing risk effectively. The future outlook for renewable energy investments is characterized by promising trends and developments that are reshaping the global energy landscape. One notable trend is the continued proliferation of renewable energy technologies, driven by ongoing advancements in efficiency, cost reductions, and scalability. Innovations in solar photovoltaics, wind turbines, energy storage systems, and grid integration technologies are facilitating the widespread adoption of renewable energy sources across diverse applications, from electricity generation to transportation and heating. Moreover, global events and policies are playing a pivotal role in shaping the trajectory of renewable energy investments. Increasingly stringent environmental regulations, coupled with growing awareness of climate change risks, are driving governments worldwide to prioritize renewable energy deployment and decarbonization efforts. Initiatives such as carbon pricing mechanisms, renewable energy targets, and subsidies for clean energy technologies are creating a favorable policy environment for renewable energy investments, fostering market growth and investment opportunities. Additionally, geopolitical shifts, energy security concerns, and technological disruptions are influencing the global energy landscape, presenting both challenges and opportunities for renewable energy investors to navigate. Looking ahead, forecasts suggest robust growth in renewable energy investments as the sector continues to gain momentum and attract capital. The transition towards a low-carbon economy, coupled with increasing demand for sustainable energy solutions, is expected to drive substantial investment in renewable energy projects and technologies in the coming years. Analysts project continued expansion in renewable energy capacity, with renewable sources accounting for an increasing share of global electricity generation. As renewable energy becomes increasingly cost-competitive and scalable, investors stand to benefit from attractive returns and long-term value creation opportunities in this dynamic and rapidly evolving sector. In conclusion, this video has provided a comprehensive overview of the opportunities and challenges associated with investing in renewable energy. We began by highlighting the importance of renewable energy in addressing global energy challenges and the growing interest among investors in this sector. Throughout the video, we explored various aspects of renewable energy investments, including the overview of renewable energy stocks and funds, key factors to consider when investing, strategies for mitigating risks, and the future outlook for renewable energy investments. It is essential to recap the key points discussed: the diverse opportunities presented by renewable energy investments, the importance of understanding risk factors and implementing effective risk management strategies, and the significant role of government policies and technological advancements in shaping the renewable energy landscape. However, it's crucial to remind viewers that investing in renewable energy involves inherent risks, and thorough research and professional advice are essential before making any investment decisions. In closing, the future of renewable energy investments appears bright, with continued advancements in technology, supportive government policies, and increasing global demand for clean energy solutions driving growth in the sector. As we move towards a more sustainable energy future, renewable energy investments are poised to play a crucial role in driving positive environmental and social impacts while delivering attractive returns for investors.